Sales are easy. It's making the call that's hard. Hi, my name is Dave Gallegos. I've spent the last 25 years in the mortgage industry and a lifetime in sales. In this show, I'll bring that experience, expertise, and the experts I've met to you with actionable advice to improve your sales. It's not magic. You just make the call. Hi, everybody. This is Dave Gallegos, and this is Make the Call. This is a podcast for salespeople, primarily in the mortgage and real estate space, but pretty much salespeople everywhere. I think salespeople in general have all the same issues and all the same challenges. And so I like to just share my thoughts. I've been in the sales industry of some kinds for my whole career and mortgage for the last 30. And today I have a special guest. Her name is Jessica Jones. She works down in Colorado Springs, and we met just checking out different people in the marketplace, and she has a really cool story. So thank you very much for coming.
Hi,
I appreciate you.
Yeah, I'm super excited.
Yeah, it's going to be fun. That's going to be fun. So let's just talk about you for a second and tell me a little bit about your background, where you're from, where you grew up, your family life, and you know, where you are now.
Okay. So moved to Colorado in 2012 from Phoenix.
Okay.
Phoenix, Arizona. Lived there for 25 years.
Is that where you grew up then?
Pretty much. Yep.
Okay.
Yeah. Grew up in Phoenix, moved here. I was married at the time when we moved, and I had family here. So my dad and my sister both lived here at the time, and we came up to visit, and we were like, wow, this is...
So you're right in the Phoenix area?
Yeah. So North Phoenix.
So you went to high school and everything there?
Elementary, almost college.
Okay.
I went into work before I went to college.
Oh, okay.
Yes. Living in Arizona, lived there my whole life, graduated high school, was going into college, and my dad asked me, my dad was a loan officer. So, Yep. He worked for Chase Manhattan Mortgage at the time, back in the day. So this was 2001. So my dad asked me, do you want a summer job? And I was like, he goes, doing loan setup. And I was like, okay.
How old were you?
18.
Okay.
Yeah. And I was like, I have no idea what that is, but okay. So yeah, went in there, and I was in charge of taking the loan applications that the loan officers took and inputting it into our DOS system. DOS. Yeah.
So what year would that have been?
2001.
Oh yeah. So we're barely 2001. We're barely using email.
Oh yeah.
We're barely
barely.
Using email. Yeah.
Everything. So we were the underwriting hub. So that was back in the day where you would get boxes and boxes of actual paper files that they would FedEx overnight to underwriters. Yep. So you had to keep your paper copy, your copy here, and then you send one
copy
in.
Package.
Yep.
Yeah.
So that was back in those days. So yeah, back then the loan officers' loan applications that they would hand write were on a tri-fold piece of paper, and I had to input all the stuff manually, and send out a good faith estimate, GFE and TIL. Send that out to them. I don't know if those were right.
Probably weren't, but back then it wasn't like nobody was ripping anybody off. It was just like, I think
it really was. It was like, their copies were on carbon copies that they got. So
and maybe crazy. One out of 100,000 clients knows to look at and understand the calculation that APR is anyway. So I don't know why this matters.
Yeah, it really does. But anyway. So yeah, that was my job. And I just kind of slowly moved into it. I decided not to go to college. At the time, I didn't really know what I wanted to do. I knew I wanted to do something. So I was thinking, well, maybe I'll go into nursing or something like that. But I stayed in mortgage.
Mm-hmm. Right on.
Yeah.
And so then marriage, when did you get married?
I got married in 2005. Okay. So I have 3 kids.
How old are your kids? 19,
17, and 8, all girls. So my oldest is, she's a freshman at Grand Canyon University in Arizona right now. Yeah.
Very cool.
So she made it back home. And then my middle one, she graduates this year from Pine Creek, and she's a senior, and she committed to Grand Canyon.
Oh, wow.
Yeah.
That's exciting.
It is.
How cool.
Yeah.
Very cool. That's a great school.
It is a really good school.
I know a good buddy of mine, real estate agent here in town, his daughter goes there.
Okay. Great school. Great school. So yeah, definitely. I'm very proud of them. Super happy that they're there. They're both, they're on the path for in the medical industry of some sort. My oldest is, she's changed a little bit, but she's looking at dentistry now. And one of the things that she's kind of decided on is her junior year, she's going to enlist in the Navy and do her graduate school from there.
Very cool. Very, very cool.
Yeah.
That's awesome.
Yeah. Wow. She wants to follow. So my dad
that's a big commitment.
It is. It's a huge commitment, but she knows like she could get it paid for in a way. And then, serve for 4 years. She can do that for sure.
Well, and you just never know. I had a loan officer in here 2 weeks ago on a podcast that signed up to go to the Army right out of high school.
Yeah.
He hadn't graduated yet, but he was signing up, and it was right after 9/11, 2 years later. And he's still in.
Yeah.
He's in the reserves.
Yeah.
And he's like, it's been like the best thing that I ever did with my life. And I was like, that's really a cool thing to hear somebody say that, because the commitment that you make is a pretty big deal.
Oh yeah. Huge. Yeah. And, I asked her like, why did you choose that branch? Like, why not the Air Force or something like that? And my dad was in the Navy, and she said, I want to do it because Grandpa was in the Navy.
Oh, that's cool.
Yeah.
That's very cool.
Yeah. Super proud of her for that.
Why not? And so now you live in the Springs?
I live in the Springs. So no longer married. So we divorced in 2019. So it's me and my girls and my two that are left here. And living in the Springs.
Right on.
Yeah.
Right on. So I kind of know how you got into the mortgage business, but how did it turn out that you stayed in the mortgage business all this time? Because you've done what's been the progression of the roles that you've had? Yeah,
started out real small, obviously, very in the beginning. Worked my way up to learning how to loan process. That was a big piece of it. And then I was like, there's other parts of the industries that I want to maybe look at. So I worked in title for a little bit.
Okay.
Yep. Did title.
Like as a rep or?
No, as like so I was a closer.
Okay.
Did that for a little bit. So that was like when we had HUD ones and everything. Yeah. And so
I love the HUD one. So simple to explain.
I know. 2016 TRID was not nice to us, but that's okay. That's all right.
It's the whole thing.
I know. So, but so learned how to do, I really learned a lot about that side of it with the, deeds and title and, legal descriptions and, all sorts of stuff that I had,
How long did you do that?
That was a few years. And so probably about 3 years. And then 2008 hit.
Okay.
Yep. Right. So I was pregnant with my second. It was 2007, and I was laid off. And I was like, So little break in the industry for a few years.
Okay.
And in 2011, kind of got back into it, went into title, and just started, trying to work my way up. And then we decided to move to Colorado.
Okay.
And then from here, once we moved to Colorado, my dad and my sister both were already here, and they were working for a broker. My dad was a loan officer. My sister was a processor. So my sister said, hey, do you want to come work with us? And I said, okay, yeah.
So to process or did you go into sales right away?
Nope, process.
Okay.
Yeah. So I didn't go into sales till I didn't get licensed until 2017. So kind of made my way. So worked at the broker for a little bit. And I've always been kind of the one that is like, I'm going to give it my all in a way and then see where it goes. And if I'm not feeling it, like I feel like, okay, I need another step.
Right.
Like, where's my next step? So after that, I went to Mortgage Solutions for a little bit, and I was a team lead over like the wholesale processing department. So that was really good. And then from there, my next step, I became a production manager for branch manager at Caliber.
Okay.
And his name was Rich Dillman, and I love that man. He's great. Yeah. Super great guy. Love his family. So I worked with him in 2017 till 21. And I did all of the, back end operations stuff for his loans. So basically once it went to contract to closing, that was me.
That was you?
Yep.
Okay.
Yeah.
All right. Were you like on like team production then, or were you like the department of the company, the branch production?
It was just his production.
Okay.
Yep. Just his production. Only, so that I did.
All right. Until 21. And then post the rates are starting to, or was it right while the rates were still low?
Rates were still good. Rates were still decent in April of 21.
Yeah, no, they were very good. That whole year.
Yep. They were still really good. So I made the decision to leave them in my next step. And I opened my own brokerage.
You opened your own shop?
Yep. My own shop. Yeah. I know.
That's a big step.
It is a really big step.
Especially to go from in an environment like a retail lending environment to broker. I mean, you had exposure to it though before.
Yes.
With your dad.
Yep. Yeah. So my background has always been sort of operations. I was always in the operations role. So always in the back end of the loans and stuff like that, just never really on the front end sales. So when I decided to open my brokerage in 21, I started out doing contract processing to get some business and some income in while I could build up that side of, lending. One of the craziest things that I look back now, I opened my brokerage. I didn't have a realtor following. I didn't know any realtors really. And because I was just in the production manager role, never originated a loan in my own name.
Wow. Wow.
Yeah.
And you went from, I'm going to be a broker, I'm going to just do this.
Yeah.
Why would you do that? What was I know why you want to, like, I'm going to do this myself and I'm going to make all the money and I get all that.
Yeah.
But I mean, to go from not originating any loans in your own name to like, I'm going to just be that's a big leap. That's really brave. Not brave isn't the right word, but I love that you took that risk.
Yeah, it was a huge risk.
Yeah, it's a huge risk.
Yeah. But
it's like you're starting a business.
Yeah. And I've never done that before. And that was super scary, but I did it.
Yeah.
And so
well, it was a good year to do it.
Yeah, it really was. So, I mean, it did help that I did, the contract processing for it too, because that was the income, the bridge that I needed from, the previous production manager job to this one.
Right.
So that it worked out really well. And then my first year as a loan originator for my own brokerage, like I closed $7.5 million.
Right on.
Yeah. Which is, awesome. It's not huge, by a lot, but
from I don't do this to
right.
Yeah.
Yeah.
No,
so,
that's decent.
Mm-hmm.
That's very decent.
So
that's respectable.
Thank you.
That's very respectable.
Thank you. So I was very proud of myself over that.
Yeah. Okay. So then what?
So the reason why really, I felt like it's kind of funny to say this, like more freedom in a way, but I had 3 kids. I had 3 kids at home. They were always doing stuff, activities, or, if I had to bring them into the office with me, or, I had to run and pick them up from school and then bring them back. And it was so much on me that I was like, I need to do something where I can help give more time to them as well, right. Be around more for them.
Sure.
So that was a big reason for it.
That was a big reason. Mm-hmm. Yeah. So that's nice. Well, that segues into a really good subject that I always like to cover on here, but so remind me of that. And so then what? So you had the broker shop and then
had the broker shop. And so from 21 until the end of last year till 24.
Okay.
So still doing the broker shop, had some loan officers working under me as well that, came to join. And then from there, I knew that I was doing well. But I knew that that wasn't where I wanted to be.
Okay.
So, and I knew that I couldn't get there on my own. Okay. Like I just couldn't do everything on my own. And that's where I was at.
It's a lot to do.
It's a lot to do on your own. Yeah. And I knew that I was, that saying you're working too much in your business, instead of on your business. Right. And that's where I was at. I could tell like certain things were just falling behind. So I made the decision and joined Guaranteed Rate now. So down in the Springs, and it's been great. Yeah. Great company, great mentorship. I love that. Yeah. That's what I really felt like I needed.
Yeah, they're one of the biggest. So let's talk about, you segued onto this, so that's why I don't want to forget this. So that's one of the things I say about the business is the coolest thing. I mean, I think the biggest reason a lot of people get into sales is they don't want somebody else to tell them how much they're going to make. That was a big deal for me. Like, I don't want someone to tell me this is what we're paying you. Because I'm like, I'll do more if you'll pay me more. The only way that's commission sales. So that was really good. And then that's one of the reasons I liked it. I didn't ever think about it like this, but this is where I think a big challenge for a lot of salespeople are. And so I'm curious to know your perspective or hear your perspective on it, because you've really been doing this for about 7 or 8 years now with a long history in the business. So that's good. A long history of the industry. Is the coolest thing about the business. One of the coolest things about being a real estate agent or a loan officer is that your time is your own. You said it yourself. You said, my flexibility with my kids and all that stuff. So that's really cool. But that's also the biggest challenge, is that your time is your own. And so a really good example of that is today, you and I had an appointment at 1:00 and you were here.
Yeah.
You got here a couple, 3 minutes early. I was a little late getting off a Zoom call, but we met at 1, right? We met at 1:00. And so the hardest thing about being a loan officer you don't clock in, right? You don't clock in. You're all in the loan officer like, well, I'm always on the clock.
Right.
Okay.
Yeah. Cause you can call me, right?
Yeah. But you didn't clock in and say like, I'm from 1:00 to 2:00 today. I'm going to do nothing but call past clients, because there's no appointment. You're going to say that you did it, but then like, oh, this came up and that came up and I actually didn't do it. And that's what holds so many people back, is because of the lack of discipline and the commitment to that schedule. Oh. So talk about that. What's that been like for you? Because this is other loan officers are going to listen to this and be like, okay, so.
I mean, super challenging for sure, because exactly what you said, you might not have appointments or anything that, you need to do. So what are you going to do in that time? If I'm working from home, am I going to clean? Am I going to do some laundry? Am I going to do that?
Oh yeah. I can't do it.
Yeah. I go into
too many distractions. I love my dogs. I'll play with them because they want to play. Yeah. So too many distractions.
I'm like, oh, let me go clean this up or let me go do this or something. Yeah. So that is one of the things, but self-discipline. And you have to hold yourself accountable, but it also, it reflects every month on your pipeline. What are you doing? If your pipeline is, low, what's going on, because there's plenty of other pipelines that are not.
We always work 30, 60, 90 days out, right? Like the activities today pays off 30, 60, and 90 days from now, not today. Right. It never pays off today.
Yeah.
So
the people that we're talking to today, they're not going to close in April.
No.
They're going to close in, May, end of May, June, possibly.
So yeah, that's the big challenge. And so what is your solution? Like, what is your approach? Or is this something you're still learning to manage?
Both, for sure. Yeah. So, I listen to a lot of coaching, try to help with that, time trackers, activity, what are you doing? I'm a very visual person. At the office, I have my whiteboard, with my, my realtors and my to-dos and, the important things. So it's there in my face every day. So I'm looking at it. So if I see a name, like I need to call that person, to call that person.
Right.
They're always going to be on your mind. So that's where I feel like it's good, like put it on the wall, put it up there. Cause if you need to look at it every day.
Right.
To see where you're at, and that's even if your pipeline, if you have a big whiteboard, put that up in your office. Look at it every day, make your calls. I got
nobody on the pipeline.
Yeah, make your calls,
I used to, when I first I had no coaching and I had a strong sales background, but I had nobody mentoring me, kind of, but not really, and nobody telling me what to do. And I did that very thing. I had a whiteboard in my office and I had the names of everybody that I thought was going to get a loan. And they were over here. And then the people that were getting a loan.
Yeah.
And so I made sure I was checking in with the people who I thought were like, hey, we talked last week. You weren't sure. Did you want to talk? That's how I followed up with everybody. I think that is the biggest challenge. And so I think that's where a lot of loan officers and sales realtors miss out, is that you don't make an appointment with yourself that's non-negotiable. Like you and I treated this. We barely know each other, but you and I treated this like a non-negotiable appointment.
Absolutely.
Which is what you would do if you had an appointment. You would have done the same thing if it was a client.
Yep.
And you would have done the same thing if it was a realtor.
Yep.
And the realtor would have done the same thing if it was a client. I don't know if the realtor always does it at the same thing if it's a loan officer that they're meeting with.
Right.
I'm giving a little shot to the realtors there for make your appointments. But
let us buy you coffee.
Don't bag out at the last minute. And so I think that's the big challenge, is like, well, that's all I need to start treating everything like, because I always use that example. If you had a doctor's appointment, you'd be there.
Right.
And your phone would be off.
Yep.
You wouldn't be answering your phone. You wouldn't be checking your email. You're engaged. Mm-hmm. And so that's how you have to treat prospecting activity. And I always think it's the biggest challenge.
Yep.
And so I go back to my first job was King Soopers, where, and I got a job at King Soopers when I was 16. This was in 1976. My dad worked there. That's how I got a job. My dad worked at King Soopers. And so all my friends were jealous because it was the job to get. And I worked there.
So you're a Nepo baby too.
What's that?
A Nepo baby too.
Yeah, a little bit. And so for sure. And so I met my wife there. This is how, I've had so many good things about King Soopers. I'm just glad I don't work retail.
Yeah.
And so, because I always say, if you work retail, you have to work nights, weekends, and holidays, all the times that everybody else is off and everybody wants to be off, right? But you had to clock in at 9:00 and you had to work for 2 hours and then take a break for 15 minutes and then work for 2 more hours and then take a break for a half an hour lunch and then back to work for 2 hours, and somebody's checking. And so but what's funny is I was doing that for $2.88 an hour when I was 16. Today, we make way better money, and we don't have that level of discipline for all this upside. It's crazy, isn't it? Isn't it crazy that we don't do it? What do you think that is?
I mean,
well, if we figure it out, we should bottle it and sell it, right?
Yeah, for real. Yeah. I mean, I think it's we get tired too, we're much older, we have families and other responsibilities, a prime example, I see your little golf thing right there. So we're golfers in the
I'm
family.
Not a golfer. That's somebody else's. Oh. Yeah. I have a motorcycle.
Okay. There you go. So we're golfers. And so yesterday, took my daughter, it was her first last tournament for, that she plays in for school. So it was, varsity high school tournament for golf. And so I went up there, and it's an all day thing, so it's like I had to make sure, my calls were done in the morning, had to make sure, that all the things were, up to date. I was still working out there, so it's still, you still fit it in where you need to. But as far as like, I knew that I was going to be up there. I knew that I was going to be here today. So I needed to make sure like the calls and stuff that I had to make were in the morning. But
so there you go.
Yeah. But
like that, it's prioritizing, right?
Yeah. So, I mean, nobody's going to make the money for you. Let's just say that.
I think that's where, so then I think it's a step back. I've always thought this too is, so what are the goals? Like, what are your goals that you're shooting for in your business that are going to support your life? And then what's important about those goals? So talk about that a little bit. Like I know that you shared with me a little bit, like what your production goals are, but why don't you talk about that a little bit?
Sure. So last year I've been super fortunate and really proud of myself that each year I have increased my volume. So that is good.
And that's saying something in this environment.
It really is, especially when you see how many licenses have lapsed, so there's a lot of people that got out of the business too. So, each year I've just, tried to increase it. Last year was a little over 9 million. This year, my goal is 15. And I'm just really just trying to put as much effort and time into it that I can to get to that goal. I know that goal is
why is the goal important though? That would be my question. Like what's important about, because I think once you tap into the why, the how gets easy. Right? Like I'm doing this and here's why it's important. Did you have that?
Yeah. So, I mean, one, it's, it's something that I want to obtain, it's there, I feel like I'm a competitive person, especially inside with myself. So that is something like, I know that I can do that. I know that I can for sure. And another reason as a why is it's, I'm a single mom, and I have 3 kids. 2 of them are going to be in college, and
not cheap.
Yeah, not cheap. And so, I know that, they're also my why as to what,
That's good. Yeah, that's cool. And yeah, to your point, you're a single mom. So, you've got to take care of yourself financially, your financial security and financial prosperity is at stake as well. Is that something that you do every year? Do you sit down and go through a business planning thing for the new year?
Yeah. So that was a huge change because I didn't for a long time. And so once I, sat down and put out a budget, did my budget for the year, put out everything that I needed to put in there, business planning, how much do I need to, who do I need to talk to every day? How many appointments, how many people do I need to meet? Once you put all that on paper and you see like, oh, okay. Right. Because in your mind, you can think, yeah, I know I need to make 5 appointments or I need to talk to 5 different people or whatever it is. But if you just think of that number, it goes away. You know what I mean? You get distracted, you get busy. And so now if you see it on there, that's your goal. Now it's on there. I'm a huge visual person.
That's good.
Yeah.
That's good. I think that helps. Do you keep that in front of you then? Is that out on your desk?
Yeah. Yep. Okay. And I did, my manifestations, what I'm going to close. I'm going to close this and I put that and I look at it every day.
Very cool.
Yeah.
Well, let's talk about the clients and let's talk about the referral partners. Let's talk about the referral partners first, right? We all have to have competitive rates and then we all have to have, because somebody can always beat your rate. So it's not, that's not a thing. I think it's more, and you always have to close on time. So that's like table stakes. You can't even show up to play the game and it's not going to set you apart with anybody. So talk about that. What is your approach for how you can serve those referral partners and what's important about serving them? Because I think they're they're having as tough a time as we've had the last couple of years.
For sure. Yeah. I mean, it's a difficult time for everybody in this industry for sure. So the funny thing is, you say rates and closing on time, that is a staple, right? Like that is the thing. Everybody should have that. That is the one thing I do not talk about when I meet new people. Yeah. So whether it's a new realtor, whether it's a new buyer, client, anything like that.
Yeah, that's my point. You really can't talk about that.
Like everybody knows that, right? Yeah. So I need to provide something else that, everybody has rates. So what else can I provide? I try to provide value of any sort that I can. How can I help you with your business? How can I help you get more business? How can I help you? Do you want to sit down and call prospects? I'll call them with you. What do you, how can I help you in your business? Because basically by doing that, I know that they're going to reciprocate and help me in my business.
Right on.
And then we can build it together.
So how many relationships have you developed and how many of you are working on and how's that going?
I've developed quite a few relationships, really good. Just this past 6 months, I would say really developed and cultivated like, 3 new relationships with agents. And I know that that's, I should probably say, 6 months is probably a good number. If people who hear this, they'll understand how hard it is to get a realtor or a new client, and, where they trust you and they talk to you. And I really try to build personal relationships. Like even when if I'm going to meet a new client or a new, realtor, I kind of joke with them or with other people. And I'm like, I treat it like a first date. Like we know we know she knows that I want her business. She already knows that.
Yeah.
But
100%.
I mean, that's why she's here. Exactly. Right. She wouldn't have taken the meeting. But so my point of that is like, I want to be your friend. I want to help you. I want to be somebody else in this industry that you can lean on. So one of the things that I did, so I have a friend, she's also a realtor, and I was like, hey, how can I help you, get your business back up? And so we did pop buys. So I went with her and did pop buys one day and drove her around. For past clients? Yeah, for past clients.
Very cool.
Yeah, so I drove her around and we drove up we were near the end, and we'd pull up and there was a for sale sign in the yard of her client's house, and it was another realtor. And she was like, oh my God, like it was, that feeling, but she knew. And, circling back to our conversation of, making the calls, following up with people, setting that time. Yes.
Make the call.
Make the call, prioritizing getting with past clients or, keeping in touch with them. And she's like, that was on me.
I think the statistic is something like 80%, it's in the 80% range of realtors' clients were happy and satisfied with the service they got from the realtor. And something like 60 or 70% of them would use them again. And something like 20% do.
Right.
And refer them. And it's for no other reason than they didn't stay in touch.
Exactly.
They didn't stay in touch.
Same with us.
Realtors are notoriously bad. I feel like, I don't know what it's like everywhere else. At this company, we've always been a very CRM driven approach to the business, where every client every day goes into that system and you follow up. And if there's nothing scheduled, if there's not another event scheduled or another task or another appointment or call, something scheduled in that client's database, it's nothing more than a Rolodex.
Pretty much.
And so like you have to have something else that you're going to do with that person. I feel like realtors have been much worse at that than we have. Mm-hmm. I think it was drilled into us maybe because we have the opportunity for the next deal on the refinance after the purchase transaction, and they don't. And maybe that's why they don't pay attention. But like, dude, this is like, so much business opportunity.
Oh, 100%. 100. That is one thing that I've definitely learned from bigger producers in our industry is the contact that they keep with their past clients. And not just from a CRM, because everybody has those. Everybody gets a, Happy Valentine's Day, or, all those, everybody gets those.
I wouldn't even send those.
Yeah, everybody gets those.
You need the personalized
ones. So, I mean, people want to feel valued. They want to feel seen. They want to feel heard. And that is another thing that I really try to do with them too is, when a client calls and if they're upset because, this and this is happening, I already 100% know they're not mad at me. So I'm not going to take it personal. I know that. They're mad at, they're upset over something that happened. And I always tell them, hey, buying a home is probably going to be one of the most stressful things you're ever going to do. And it's completely okay if you lose your, it's okay. Yeah. We all stressful. Get it. Yeah, it's stressful.
For sure.
So I try to be empathetic, be there for them, because when you get a new client on the phone, so if you get a lead, right, for, say a new buyer and you have a phone call with them, you have about 10 minutes to build trust.
And that's it.
Yeah. So, I try to be authentic, transparent, approach it with,
I say this all the time. We and I've heard this from loan officers where it's different now. I hate hearing that because I know it. I don't originate anymore, and I haven't since like 2012, but I was a pretty productive originator, and I took a lot of pride in the relationships that I built with my clients. And I was always just shocked and amazed when a client, and it didn't happen often. So that's what I'm saying. Like it happened like, I don't know, I can think of like a half a dozen times in my career where somebody shopped me. And I was like, what is going on? Like, why are you even talking to somebody else? Right. What is happening?
Yeah.
And because it was such a weird thing for me. And the reason I think that happened, and I want to do I actually just wrote a playbook, and the marketing finishing touches are on preventing and overcoming price objections.
Okay.
Because I think two things that have happened in our industry is that because of COVID, and so like this room that we're sitting in is a studio now, but this was a sit room. This was a room that we would bring a client in. There was a table here, monitor up on the wall, and we have 2 more of them right next door. So there was 3 of these rooms set up when we first moved into this space for the client appointments, because the client used to come and see you, and they would bring your docs in. So with the advent of COVID, like, well, we can do all of this online. We don't have to. So there's not a lot of work from home, and we're doing Zoom meetings. And because of the Zoom meeting, I think the lack of personal relationship is a bigger risk now, because you're not meeting somebody face to face. You and I are going to know each other now, and we're going to have a different relationship than if we never met face to face and all we did was Zoom meetings. 100%. I'm like, hey, see ya.
Pretty much.
And so that's hard to do. And that's a real talent and gift that you have to cultivate to make a connection if you're just going to make it on Zoom. So yes, it's different today because you're not meeting people face to face. However, what didn't change, and what I think is really important, is it's still about relationships. It's not about transactions. And so if you make it about the transaction, then we're going to get commoditized. If you treat a client like a transaction, they're going to treat you like a commodity.
Absolutely.
And we deserve it. Like, we deserve to be treated like a commodity if we're treating it like a transaction. That's what the big call center lenders do. They're transactional. They're not relational. And that's where I'm not that concerned with like Rocket and Redfin and Mr. Cooper and all the things that everybody's doing to try to capture more clients. Like, okay, but it's still about a relationship.
Right.
And the bigger you are, the harder it is to have that relationship. I have one-on-one relationships with my customers. The thing I liked more than anything was I liked my clients. And I've always said that, like, it really helps if you like people. This is a hard job if you don't like people.
Oh, for sure.
Right?
For sure.
Because you can create.
And you even have to like the people you don't like, if that makes sense.
Yeah, you're right. That's a good point. Mm-hmm. Yeah, that's a good point. That's a really good point. Well, it seems like you have a really natural way to go about that too. So I would guess it's pretty easy for you to create those connections.
Yeah, I mean,
because you have about 10 minutes.
Yeah. So I mean, I'm kind, bubbly. I want them to feel comfortable. Tell me about your goals. What are your goals for this purchasing? How long do you want to stay in the home? Yeah. I ask them, things like, where are you comfortable with your mortgage payment? Because that I know, I don't need to ask them about, we don't need to talk about rates. I can figure that out where they're at with their mortgage payment.
Right. Yeah. But you don't pay a rate, you pay a payment.
Right. And so
what's your monthly payment goal?
Right.
But it's not the rate.
But to them, they're like, okay, she's, asking questions about, where I'm comfortable. And that's ultimately, obviously, I always want my clients to be comfortable with the transaction and what they're getting.
Right.
Just really try to, be about them. Tell me about you.
I think that relationship building thing is so critical. And then the long-term relationship is easy. Mm-hmm. If you've created that kind of trust and likability. We do business with people we like and people we trust.
Yep.
We can like them and not trust them, and then we won't do business with them. But we can trust them and not like them. We might still do business with you,
but we're going to go.
But if we like somebody better and we trust them just as much, we're going to use them.
Exactly.
So you have to create that likability and you have to create that trust, and that happens in the first 5 or 10 minutes. You don't have much longer than that. It's so important how you show up. Like, were you on time? Were you professional? Were you friendly? Were you in a good mood? Like, you're performing.
Right.
So,
and you have to be available, you have to be available. So I have clients that, like, just this week, can you, is 7:30 too late to talk on the phone for a first time, consultation? It was 7:30 at night. I was like, no, I'm not a 9 to 5er, and we made that appointment on a Sunday. So it's like, be available for them. If you have that mentality of, I can't work
that. Yeah. You got to meet them where they are.
Exactly.
Now, what we've learned is those weekend calls that you get, right? Where all of our loan officers always thought, I have to be available to take a new lead on the weekend in case they get it. And he goes, and what we've learned is only about 1 in 10 really want to talk to you today. The rest of them are like, hey, is this urgent? Like, do you want to do this today? Like, are you getting ready to make an offer? Or do you just want to say, no, not at all. It's like, okay, yeah, so let's schedule an appointment.
Yeah.
But a lot of loan officers don't realize that. And so they're like, oh yeah, okay, I got to take this call.
Right.
It's like, well, you don't got to take the call. Ask them.
Yeah.
do you want to talk right now? Because I can make time this afternoon because I'm with my family right now. And everybody understands that typically.
100%.
Like if you're in the middle of something, I've never had a client like, nope, if you can't talk to me right now, I can't work with you. And I'm like, and then if I really was with my family, I'd be like, okay, well, maybe I'm not, maybe we're not.
Yeah, this isn't going to fit then.
Because, it's easy to say when you have a lot of deals. It's harder to say when you don't.
Sure. But even if you don't, like, you don't want the ones that are going to drain you like that. You know, don't let them pull you through the mud. It's not worth it. It's not worth it.
You have a lot of wisdom for somebody who's just getting going.
Well, thank you.
Yeah, you're going to be good at this.
Thank you.
It's learned like you're getting some, you're paying attention. So that's good. It doesn't have to be that way. Let's talk about the clients though. Let's talk about like some of the challenges that you see, the most common challenges that your borrowers have experienced and how you help them overcome those. What do you think their biggest pain points are?
Right now, biggest pain points. So I work with a lot of first-time home buyers and a lot of VA military families.
Well, I think I know what you're going to say, but go ahead and say it.
So first-time home buyers.
Yeah.
So the
affordability.
Yeah, affordability and, you know, the rates. Really, it's the higher interest rates right now. If they were a little bit lower, it'd be a little bit more affordable for them. However, it's still obtainable. We still have ways to get around all of that. You know, I talk to them like, you know, your comfortable payment. I know that this payment isn't going to work for you. How can we make this work? You know, temporary buy downs. We'll look at, you know, we'll explain all of that to them. And that is a really good source for first-time home buyers. And it gives them that peace of mind, you know, for the first year or two of what their payment is. Because they're going to refinance. You know, people are going to refinance within the first 2 years at least. So if we could just get them that affordability for that, you know, help them till that point.
Yeah. Yeah. No, that's always the biggest. My wife, after I was doing this for a while, she goes, you know, I listen to you and all these conversations that you have with borrowers. The only thing I would care about, 3 things. She goes, I think I only care about 3 things. What's my monthly payment? How much money do I need?
Yep.
And am I getting a loan? That's it. I don't care about all the other stuff you talk about. I just don't know why you're telling me all these things. And I go, that's a really good thank you for telling me that, because that's somebody who's not in the business and is going, she is now, but not in our space.
Yeah.
And she's like, yeah, you guys talk about stuff nobody cares about, I think. She goes, I only care about those 3 things.
I mean, she has a point.
She really does have a point. It's
She's got a point.
Because people don't even remember the rate. Like, how many customers have you talked to that need to refinance who don't know the rate they have?
Right.
They think they know. They tell you it's something, and then you get the mortgage statement. It's like, no, that's not your rate.
Yeah.
You have this rate. Oh, I thought it was this. And nobody ever thinks it's higher. Nobody ever thinks it's higher than the rate they have. They always think it's lower than the rate they have. And then when you tell, it's like, no, that's not 6 1/4. That's 6 3/4.
Yeah.
Or something like that. I had a guy who told me once he was in the, like, I'm in the 6 1/8, 6 1/4 maybe. And I got his payments like 6 7/8, dude. It's like 7. It's like, oh, is it that high? It's like, nobody knows the rate they got. They only know it when you're quoting it. And then later they don't really know.
Right.
And so I always just tell the customer, please don't talk about the rate you're getting with your friends, because nobody is going to admit they have a higher rate than you.
Right.
Ever.
Right.
They're all going to lie. Yeah. They're all going to say, like, I didn't pay. I got a much better rate. And then nobody knows what they paid for the loan. So don't talk to your friends.
Right. They only know the rate if it's in the 2s. That's the only rates that people know right now.
Point. Yeah. That's a good point. But I thought that was a really good point. Like, do I get the house? Am I getting it? Like, will I be able to do this?
Mm-hmm.
And
which is, it's anxiety for buyers. I 100% get it. Totally. I mean, every day, unless they know. Yeah. So I helped a military family earlier this year, and they were denied by another lender. And because their debt to income was too high. DTI was too high. And that other lender had some overlays. So I was able to get their loan done because we don't have overlays for VA. And they were living separately. So he was in the military down in the Springs. He was already stationed there. But his wife, she was in the process of getting her permanent resident card. So because she didn't have that already, she couldn't live on base with him. So she had to live off base with the kids. And he had to live. So they were like, it was a horrible situation for them. Like, and if they weren't able to get this house, if he wasn't able to buy this house, they wouldn't be able to live together. And so, like, I mean, it was amazing. You know, I've helped single moms buy their homes for, you know, first-time home buyers for kids that they, or, you know, for the place for their kids where they didn't think I love those stories. Those are the ones I live for.
No, those are the best. The ones that make you cry because they're crying.
Yeah.
Right?
Yeah. I had a mom, like, She first time young mom, 20s, early 20s. She had a little boy. She like dressed him up in a suit for closing because they were so proud.
Cool.
Yeah.
No, I tell this story all the time. I was 26 when we bought our first house, and we had
how much was it?
97,000.
Yep.
2 bedrooms, 2 bath, 2 bedrooms, 2 baths, 3 bedrooms, 2 bath, 2-car garage, brand new house, Melody Homes off of Kipling and Bowles. And it was no landscaping, no fence, no nothing, no drapes, no nothing. There was no nothing. Like we moved in, we had to do everything.
Okay.
And every house on the street looked like it looked exactly like that. Like they didn't finish anything. We lived there for 7 years, but it was like one of the proudest days of my life as a father and a husband. I was only 26 years old, but we had, we had a little, our daughter was, I don't know, 1986. She would have been 3, and our son was just born in May, and we closed like in July, and it was just like such a big deal. And it was all my wife's pushing to like, I want a house for my kids. And that's every mom. I think that's every mom and every dad.
Oh,
yeah. Like, I want a home for my family to raise my kids. I want their own yard. I want them to have their own rooms. I want us to be able to do whatever. And so it's a big deal. I got in this business in 97, and it was the first time I had where in my career, I felt I had like a real purpose, because I'm actually helping. This really makes people's lives better.
Yeah.
And I had never sold anything that really I didn't make anybody's life worse, but I didn't really make anybody's life better either.
Right.
This was like, oh man, this is different. And that's what was the coolest thing about it.
Yeah. I mean,
Same.
100%, you know, and that pride feeling and how proud you felt for your family. I mean, they all feel that, you know?
Yeah.
So after my divorce, I bought my house. And so I bought my house with my girls. So we all had a place, you know, we weren't renting anymore. And when I left closing, like I walked out and in the parking lot, and I just bawled my eyes out because I was just so proud, you know, it was like such an achieving moment to do that. So I know that feeling. So like, I want to give that to people as much as I can.
That's awesome. Well, that's great. Yeah. So you're going to be in this for a while. Like you're not going anywhere.
Nope. Not going anywhere.
Good for you.
Yeah.
Good for you. And then most of your business located in the Springs?
Most of it is. So I am licensed in Arizona too, since, you know, back from home.
Yeah.
So, but I am expanding some licenses. I have, I have a team behind me now. So I have 2 loan officers on my team. One of them is in Castle Rock, and her name is Jolene. She's a certified divorce lending specialist. And then I have my other girl. She's in the Springs. She's actually in Virginia right now. She is in the Army Reserve, so she kind of goes back and forth. She's a certified credit repair specialist. So the goal is to just provide value to our clients. People need credit help, right? I mean, not everybody comes in with, you know, ready to rock and roll. But the thing that we don't want to do is send them somewhere else, you know, to get that help, because then we're going to lose that touch with them. And not to mention that costs money. You know, that people charge, you know, $200, $400 a month just for the credit repair services, and they drag it on. I'm not going to, you know, they drag it on for months. So at least we can keep this in-house. We're going to get a plan for them. And again, it's just value. Like what else can I do for them?
So talk to the loan officers that are maybe just starting on their journey. They're not as far along as you are right now. What would your advice be to somebody who's just getting going when it comes to going out and trying to build relationships with referral partners, and talking to the people that they already know that's in their current database or sphere of influence that they've never, like, I'm brand new and I'm just starting to do this. And how do they talk to those? What kind of advice would you give somebody like that?
You know, be humble. 1, be humble. And 2, you know, have thick skin. You're going to hear a lot of no's for sure, but the yes is going to be amazing. So, I mean, just keep at it, you know, and be kind, you know. We're all fishing in the same pond, you know? So, and honestly, I would say newer loan officers, get a mentor for sure. Get a seasoned mentor who's been in the business for a few years at least. I would say at least 5 years probably before COVID.
Yeah.
Definitely.
Yeah. Because it's a different world.
It is. It is a different world. You know, the bond market right now is going crazy, right? You know, the past 2 days, it's been a bloodbath.
Last week, This reminds me of 2008. This reminds me of the mortgage meltdown.
Oh, for sure.
That kind of activity. This doesn't. And this COVID was a little like this, although COVID was big market swings every day for a while. And then we kind of settled into like, hey, rates are just going to keep going lower. 2008 was like, are we going to be doing this next week?
Right.
Like, it was very odd.
Right.
This kind of feels, I don't have any foreboding predictions like that. There was a time though that I was like, I'm not sure I'm going to be doing this next week. When everything seized up in August, it was like, are we closing loans? Like, what are we doing? Do we have money? Like, can we fund loans? Because there were companies that didn't fund loans. Like, people were sitting at the closing table signing documents, and the closers would come in and say, "There's no money. We're not funding your loan." And so I don't think it's like that. I'm not seeing that, but it is that level of uncertainty that we got to be the voice of calm and reason.
Oh, for sure.
Just relax. Yeah. This is going to shake out. Yeah. We've been here before. Yeah. So the worst thing that you could possibly do is panic, because that's not going to help. No. I feel it's going to be better. That's my outlook on it. But I'm optimistic. I can't be pessimistic. You go back to, if you do some simple math, the population of the world is projected to continue to grow. The last time I looked at this data, to the end of this century. So it's 2025. So for another 75 years, the population of this world is going to grow. The population of the United States is also projected to grow, because this is still the most attractive economy to live in around the world. Right. So at least it is today. It depends on what happens. But those two factors tell me that if the population is still going to grow, then there's a simple reality of, where is everybody going to live? Everybody needs a place to live. You might as well own some real estate, whether you own it to live in it yourself. That means the value of that's always going to go up, or you can keep it and own other rental property.
Oh, for sure. I mean, generational wealth is big deal. It's a huge deal, and you can build that in real estate. 100%.
It's that old adage: don't wait to buy real estate, right? Buy real estate and wait.
Yeah. Pretty much. I mean, that's why I tell them, if you can't afford it, that's one thing. Don't ever be house poor. Don't ever put yourself in a position where, you're going to ruin it, ruin your credit, get foreclosed on, or anything like that. Like, never do that. But if you can, don't wait.
You should.
If you can, you absolutely should right now. Yeah. I mean, the dip is coming.
Well, I always tell people, like, I can promise you this: houses are not going to get cheaper.
No.
They might dip a little
but
bit, not enough for you to make a difference.
No.
So just buy the freaking house.
And, Colorado, we have a strong economy in Colorado.
Yeah. The business economy, the employment economy.
Yes. And, huge economy down in the Springs, South, military. So, I mean, there's 4 bases there. Yeah. So it's a huge economy. So no, we don't see as, what other states are seeing right now.
Right. So right on. Well, this has been great.
I know. I'm good. Yeah. Thanks for having me.
Some really good insights and really good advice, especially for younger, newer people that are in the business. I think this is great. I think people would be fortunate to work with you.
Thank you.
So
Thank you. Yeah.
Thanks a lot for coming on. This has been great. So this is Jessica Jones. Again, I'm Dave Gallegos from Make the Call. Thanks a lot for listening, everybody. And if you like this, please like it. If you listen to it, please give us a rating and share it. And thanks a lot for joining.
Thank you for listening to Make the Call with Dave Gallegos, brought to you by Zenith Home Loans. If you enjoyed this episode, make sure to subscribe to the show anywhere you listen to podcasts, and share the show with a friend or colleague who would also find value.